In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest video on my channel, so that way you get the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. And for Tuesday, August 13th, 2024, mind you, this week is a jam-packed week. We have CPI and PPI inflation numbers coming out, which is relevant because that way we know how much, in a way, if inflation is worse than expected or versus better than expected, then there's a chance that we might have an idea of in September's rate cuts, if it will be 25 basis points or 50 basis points, potentially. Now, in terms of Tuesday, August 13th, 2024, 6 a.m. we have NFIB optimism index. 8:30 a.m. we have producer price index, as well as core CPI or core PPI, I apologize, and then as well as PPI year over year, and then core PPI year over year. And for the Wednesday, it is the CPI. So just be mindful of that. That is the next following day. And then in terms of the movements for the markets, now for the most part, usually it's not ideal to potentially predict in a way what the movement might be before the numbers come out, but I'm going to give you guys the ranges in terms of resistance and support levels on the upper side and the lower side, not necessarily in the max side, more closer to the ranges, and then go from there. And in terms of movement based off the MACD lines, mind you, the MACD lines indicate if we're in the bearish or bullish movement for the time being. So for example, here is one. I believe this is the 3-month chart, and you can see that it was in the bullish movement, went into the bearish movement, and technically more downside could be coming potentially. But again, the reason why I usually don't look at the MACD lines before the inflation numbers come out or some, for example, big event in terms of numbers coming out is because those numbers alone could go into the opposite direction based off, regardless of what the MACD lines are showing. So mind you, if the inflation numbers are way better than expected, then the markets could be going up regardless if the MACD line is more pointing to the downside, right? Now, I will say the longer term, not necessarily the long term, because in the end of the day, all markets for the long term keep going up, right? This is the whole entire chart, and it is going to the upside regardless, right? But in terms of more of let's say the next month or so, the markets seem like they're pointing more to the downside. But the direction for Dow Jones, Nasdaq, and S&P 500 for the time being are pretty much in sync. They are kind of showing a 50-50 coin toss in terms of up and down kind of thing. That's why I'm giving more of the upper and down, lower ranges, and especially for the fact that the CPI and PPI inflation numbers are coming out, more specifically for tomorrow, the PPI inflation number, right? So first, I'm going to cover the S&P 500, then I'm going to go through the Nasdaq and then the Dow Jones. And like I stated, more of coin flip for the time being. Now, we had a downward trend resistance line. We did have a breakup before. We have multiple touch points, and we technically could be bouncing off it to the upside. So hypothetically, it's showing upside. But again, more of the longer term, I believe, in my opinion, we are going to be heading down potentially. But there's a little bit of a conflict. The market is expecting a rate cut in September, so the market would be satisfied by that rate cut. And I don't expect it's because technically the MACD lines kind of show major drops coming later on, but because we're close to election, like we're in election year, close to election, so on and so forth, and essentially, in my opinion, if Trump wins, the markets would rally, right? And if that's the case, then this downside that is showing later on, we might be potentially just completely overturned and just go, like, not necessarily just go straight up, but more would convert the MACD lines to the downside to the upside. But that's just my opinion. So for the time being, in case just given for just tomorrow, basically, we're at $533.27. This is for the SPY, mind you, which is an ETF for the S&P 500. So just same thing, just different ratio. That's all it is. And first, basically, the resistance level would be about $535 and give or take some change, which coincides with pretty much the ranges right about here where we pretty much peaked at as well, but the moving average is right about there. And then the next level we're looking at is $538 and some change. But essentially, in my opinion, if we were to head up, this would be more for the Wednesday personally, getting closer to that range. It's about $543 and some change. That would be where this zone is. There's a small, decent amount of false breakouts as well, but there is resistance at the same time. Plus, we see support throughout the whole entire range about here, and then there's a couple more resistance support touch points as well. But that again is about, give or take, about $543 and some change. In my opinion, if inflation is better than expected, we could probably see by the Wednesday, or maybe if the market is way too optimistic based off the PPI inflation numbers in terms of production, we could probably see that by the end of trading day at 543 on Tuesday. But in my opinion, that would be more closer to the Wednesday end of trading day. Again, if inflation numbers are better than expected. Can we go higher? Obviously we can, but we'll see. Now, one thing I should probably give is the PPI expectation numbers. They're more likely going to be looking at the core PPI year over year. And previously it was 3.1. Expected is not really posted for the time being, but if we get better than 3.1%, then that obviously will be in favor. The market will be favoring that, obviously. Now, to the downside, we do have support based off the moving averages. First, I'm going to cover. So technically, roughly about $529 and some change. I think that would drop through anyway, break through anyway. And then $526 and some change. Mind you, actually, the one thing that I should mention is 531 and some change could hold off, because we had resistance at 531 and some change, 531 and some change, and 530 essentially, because it's a clean number as well. But I should say constantly, every single time it hits about $531, it ends up getting in within the range of 529 to 531. So within that range regardless. So $529, $531, give or take. And there is support plus resistance. So that could potentially hold us if it's, for example, the inflation numbers are subpar and it's not necessarily bad, but it's not necessarily great, and it bounces off and goes up to higher levels. So just to visually show, it goes down hypothetically, hits a level horizontally, and then just goes back up, trying to test the moving average and so on and so forth for the next day of CPI inflation numbers, so consumer inflation numbers. And then the next level after the $529 within the moving average as well is the next moving average is about $526, give or take, 526, 525. And then the next level, pretty much, in my opinion, just like, for example, I think I'm going to show for the Nasdaq, it's the same thing that's the Nasdaq is going to have, because they're pretty close in terms of overall movements plus, not necessarily price points, but essentially the graph. It's pretty crazy. But the level that I'm thinking, if inflation numbers don't come better than expected, so on and so forth, is about $517 and some change within that zone. So we saw where it dropped down to, like, for example, $518 all the way to $513, give or take, within that zone for the most part. But I'm basing that off of support level right about here. There was a support level drop, a couple of them, 1, 2, right about there. And then there is breakouts, but there was a decent amount of support levels. And if I extend the line, there's about resistance right about the same price point. So give or take about $517 and $518, so on and so forth within that range. Again, could we go lower? We can. Like I've shown in the previous videos, there is a level of support at the $500 and $499 price point. I personally don't think we're going to go that low for the time being, because, for example, leading up to the weeks, for example, inflation numbers, I'm not expecting anything crazy personally in terms of the market will react in a negative way for the time being. Plus, we have NVIDIA earnings coming up by the end of the month, which I think personally it would be a decent earnings / if not a beat. And if it spikes up, because it's a mega cap stock, it'll carry up the markets in a way, potentially to the upside. Not guaranteed, but I think that could happen. And if that is the case, we won't end up seeing the previous levels that I mentioned, about $500 to $499 in terms of support level that I showed in the past videos. Now, for Nasdaq, I'm going to be looking at QQQ, which is an ETF for Nasdaq. So same thing, just different ratio. That's all it is. And essentially same thing like the S&P500 downward trend resistance line. Yeah, we had a breakout before, but we had multiple touch points, right? 1, 2, 3, 4, or 1, 2, 3. But there was quite a bit right about here in this zone. Broke through it, hit the moving average as well, just like the S&P 500 within the same horizontal, like pretty much zone as well. You saw like pretty much a good amount of consolidation, spike ups, getting knocked down. So pretty identical. And if we were to go up, mind you, close at $451 and some change. So you're going to have some resistance at basically $453 and some change. Just in case I said that wrong, we closed at $451 and some change. So again, the moving average is about 453 and some change. Then the next level of resistance moving up to, obviously there is going to be some resistance a little bit on the way going up to, same thing with the S&P 500, but essentially moving up to the 460 and some change, 461 and some change. And if the market is very optimistic in terms of CPI and PPI inflation numbers, I would say more so for the Wednesday, potentially going up to $465 and some change. Again, can it get higher? Can it go lower? Obviously can. I will cover the lower numbers, but just in case, the moving average for the highest one is about $469 and some change, essentially $470. But yeah, and now to the downside, we do have potentially support at the $448 and some change. That is based off support level right about here, resistance zone, so on and so forth. And when we spiked up, I believe this got knocked down, but then this was during pre-market. Yeah, during pre-market it broke through, but before that it was actually trying to not pass it, but a couple of false breakouts, so on and so forth. And then plus before we gapped down, we were within that zone as support as well during that previous trading day. Now in terms of the lower levels, if the market is pretty much not in favor of inflation numbers, then the zone I'm expecting where we have constant support right across right about here. Plus there was a couple of resistance levels, but there was massive breakouts, so I wouldn't necessarily count those previous ones. But then there was resistance right about here, 1, 2, resistance as well, but quite a bit of support, which is about $433 and some change, give or take. So again, that's $433 and some change. And if by Wednesday, if everything just starts breaking, not Wednesday, personally, this is almost the same thing as the S&P 500 where I mentioned the $500 price point in terms of SPY and $500/$499. If the markets are, I personally don't think we're going to see it. But if the market's not in favor of the CPI, PPI, and something happens horrendous in terms of war and so on and so forth, then we start heading down to the $413, $412, give or take. That's based off the support bounce here, resistance level, so on and so forth. I believe there was a spike. No, there wasn't. Okay. So, but the problem is, not the problem, sorry. More of the reason, just like I mentioned with the S&P 500, so on and so forth, I personally don't see this happening in terms of the level, because right now the market already knows what they're expecting in terms of inflation numbers and Fed rate cuts in September. So I don't expect any surprises personally. Again, unless the inflation number comes in way worse than expected and then war breaks out, so on and so forth, something happens in terms of a surprise, right? Now for the Dow Jones, again, same movement overall expected, but for the most part, mind you, we closed at $39,357. And the levels that we're looking at, this was an upward trend resistance line dating back since 2021. This is an upward trend support level dating back since April of 2024. I do not think we're going to see this upward trend resistance level right now for the time being. Maybe by potentially at the end of the trading day Wednesday, when the CPI comes out in terms of the morning and the market is in favor completely. But if we were to see this level, personally, I think, in my opinion, by Tuesday, we would be within this range of moving averages, which coincides somewhat with the horizontal resistance levels. There's one right about here, and then the maxed out right about here, give or take. So within the ranges, pretty much both of them. So you're looking at resistance, give or take, about 39,800 to 39,900 level, and then about the 40,050 points level. So again, that's about 39,800, 39,900 points level, all the way to 40,000 and 40,050 points, give or take. And then by the Wednesday, again, if the market is moving in a favorable outcome in terms of the upside, then you're looking at resistance with the upward trend resistance line dating back since 2021 at pretty much about the 40,400 and some points level, give or take. Now to the downside, if the markets are not in favor of the CPI and PPI inflation numbers, personally, the Tuesday, I don't expect it going lower than this upward trend support level, which is pretty much, give or take, about, depending on when it hits it, right? The longer it takes, the higher the low will be, but about 38,600 points, give or take. There is support on the way down, obviously. We'd be looking about support about the 39,000 points, so about 357 points lower than what we closed at. And then by technically Wednesday, end of trading day, if the market, again, so PPI inflation numbers are horrendous. Let's say it drops down here. Then the CPI inflation numbers are horrendous. Again, I'm not expecting this, but there's a possibility. And if that is the case, then we have this upward trend support level dating back since 2021. Let me show this potentially right about here. So we have a bunch of support bounce off levels right about here. Again, this is since 2021. This was the upward trend resistance line dating back since 2021. I don't think I zoomed out earlier to show you. And coincidentally, the moving average is pretty much within the zone, so by the time it drops down, I'm sure the moving average will drop down as well and meet at the upward trend support level dating back since 2021 as well, coincidentally. But essentially, again, if the CPI and PPI inflation numbers are horrendous and it's back-to-back drop days, then by the end of the trading day Wednesday, again, I'm not expecting this, but in case it happens, then you're looking at support about 37,800 to 900 points, give or take. But yeah, so that's basically it for today's video. Hopefully you guys enjoyed it. Hopefully you guys liked it. If you did find it beneficial, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. And I do post these videos daily, so I highly encourage you to follow/subscribe so you'll be notified when I do upload my next video. And that's basically it. Thanks again for watching. I appreciate it. Take care. God bless and peace.